The initial stages of saving money are occasionally, if not usually, the most difficult. We can go on and keep saying money can't buy happiness, but you would quite agree that there is this unexplainable sense of security you get when you know you have some money tucked away for rainy days. This is why it's very possible to feel like you are on the brink of financial disaster if you don't have a handle on money management. But not to worry. Here are 10 tips and tricks to save money that you can use to improve your finances. Number 1. Understand your finances. Taking account of your current financial situation could be frightening, but it is necessary if you want to create a budget or even start saving. In simple words, you need to understand your cash flow. The easy way to do this is to assess how much you are now able to save or how much you are overspending each month by comparing your monthly income to your expenses. You also have to put your expenses into fixed and variable categories. When we say fixed expenses, this means things like your rent, electricity bills, and the like because they are often difficult to change. Variable expenses are those you can easily adjust, such as groceries, subscription services, entertainment, etc. Surely, you can deduce how this ends, as the first step to saving is right here, and it's as simple as cutting back on those variable expenses that weigh too much on your income. Number 2. Creating a realistic budget. You can start making a budget now that you are aware of how much money you spend each month. This will help you to plan your expenditures and avoid overspending by using your budget to see how your expenses compare to your income. Also, don't forget to use real numbers. A budget has to be based on actual figures rather than assumptions of what you believe you are spending in order to be effective. Aside from budgeting your expenses, you must also budget a percentage of your income for savings. You can start by saving a percentage that is comfortable for you while you work on increasing it along the way to about 15 to 20% of your income. Number 3. Pay off debts. Once you have a budget with a category for savings, you should also consider any outstanding balances you may have on existing debts. Paying off debts as quickly as possible is the best way to go because the interest on those loans will never stop accumulating. So if you delay clearing them, the interest alone could completely deplete any money you have managed to save. Adopting the 50-30-20 budget scheme designed by U.S. Senator Elizabeth Warren is one easy way to quickly get out of debt. The breakdown of the formula goes thus. Spend 50% of your income on your fixed expenses and 30% on your variable expenses. Then you can save the remaining 20%. Take, for instance, if your monthly take-home pay is $2,000 after taxes. You can set aside $400 each month. With this, you would have repaid about $4,800 worth of debt in just 1 year. Don't forget that you can still add a debt category to your budget, which will be catered for by splitting your savings into 2 or whatever is comfortable for you. Number 4. Set a goal for your savings. One of the most essential pieces of money management advice you can use if you are serious about improving your finances is to set goals. Your financial objectives should be written down and reviewed whenever your circumstances change, such as when your income decreases or increases. The main purpose of setting these targets for yourself is to continually keep you motivated and focused. Start by considering your potential savings goals. Think about both short-term, which can be around 1 to 3 years, and long-term, which can be around 4 years or more. With this in mind, you can then come up with a rough estimate of how much money you will need and how long it will take for you to save it. However, you should be realistic with your goals because they will also have an impact on your budget. Number 5. Set up a separate account for your savings. It's not just about creating a budget and making efforts towards saving. You also need to keep your regular expenses and the money you want to save apart if you want to save money quickly. Doing this means you have to open a special savings account. Many savings accounts are appropriate for both short and long-term objectives. The best part is that you are not required to select just one. You are free to choose any combination of accounts that will help you save money for your goals in the most effective way. This can be done by carefully examining all the possibilities and taking into account balance minimums, interest rates, risks, bank charges, and when you will need the money. Setting up a separate account will reduce the possibility of using your savings to pay for daily expenses or succumbing to any spending impulse. Number 6. Make your savings automatic. After setting up an account for your savings, you can go a step further by making your savings automatic. Setting up automated transfers into your savings accounts after each pay period will encourage smart savings practices and help you keep track of your bills and spending. In fact, most financial institutions offer this kind of service. You can think about applying this technique if you have a fixed income. This method can be especially helpful when your savings account is set aside for specific objectives, like creating an emergency fund, taking a vacation, or saving for a down payment. You can avoid wasting time or effort considering a transfer by doing this. Let's not forget that it will also prevent you from having second thoughts about saving when you should. Number 7. Consider your purchase before making it. One of the most significant barriers to saving money quickly is splurging. Everyone has this drive to buy things impulsively, just to experience the satisfaction from a flashy new purchase. But guess what? Most purchases made in this state are always unnecessary. So give yourself time, about 3 to 4 days, before you consider making a big purchase. This will also give you enough time to check out other stores to know if any are offering a better price. You can also make use of the 30-day rule of delaying purchases to prevent yourself from overspending, especially if you're doing shopping online. Consider adding the item to your cart and then leaving the page. You may even get lucky that the retailer ends up giving you a promo code after discovering that you abandoned your cart. Number 8. Always plan for emergencies. Another trick to improving your finances is to budget for unexpected expenses. Everyone would agree that no matter how well you plan, life often surprises you with unexpected emergencies. These unfavorable situations sometimes come in the form of hospital visits, job loss, car repair, etc. While you can never predict when an emergency will arise, you can at least stay prepared by saving money. Making contributions to your emergency fund out of every paycheck should therefore be a priority. You'll be happy if you do this because you won't have to stress yourself much when matters like this arise, as you can easily concentrate on putting out the unexpected fire. Number 9. Use cash instead of a card. Credit and debit cards have the disadvantage of making it easier for you to access more money, which encourages you to spend more than you intended to. But when you pay with cash, the stress of going to the bank or ATM to get extra money will definitely curb your spending. It is also simpler to keep track of your spending when you make purchases using cash you've planned. Paying with cash also keeps you grounded in reality regarding how much money is coming in and going out on a weekly and monthly basis. And before we move on to the last tip, please be sure to hit the like button and subscribe to our channel for more quality content you were not taught in school. Number 10. Start investing now and making retirement plans. Making your money work for you is as important as learning how to handle your finances. Investing is a crucial component of wealth building if you want to achieve long-term success. Making long-term investments is one of the finest methods to improve your finances, which can, in turn, produce amazing results. And as you invest more with each passing year, you'll be able to watch your money progressively increase. When it comes to making plans for your retirement, it may seem pointless to start saving for that now since you won't be retiring for many years. However, it is important that you start planning for your retirement as soon as you can. So, you ought to, at the very least, start making contributions to any retirement plans offered by your company, such as a 401k. After setting things in motion by utilizing the discussed tips, you should also constantly review your goals and your budget from time to time. Keeping track of your progress could even motivate you to come up with new ways to save and reach your objectives more quickly. Remember that saving money and improving your finances is a process that takes time and effort. However, by following these tips and tricks, you can start making progress towards your financial goals and achieving financial freedom. If you enjoyed this video, make sure to subscribe to the channel, like this video, and watch the next video as well. Thanks for watching, and we'll see you soon in our next video.